Hello, everyone. Welcome to DNA's November webinar. An important topic, how to raise capital during the holidays. Very timely. We get asked about this every day in one way, shape, or form, sometimes verbatim, of should I market to investors through Thanksgiving, December, Christmas, Hanukkah, New Year's, Kwanzaa, the first parts of January and the new year. Are people actually going to be investing? I heard venture capital firms, investment banks, they just take off from mid-November to mid-January. Why would I spend a dollar on advertising? Why would I anticipate any investments? We're going to answer those questions today. We're going to show you some of the top performers historically during these final months of the year, talk about digital marketing best practices and how there's a lift in traffic, conversions, all different types of behavior we see during this time of year. We're going to show you why groups have been so effective and what you can do productively. Joined here by Ashley Inman, account strategist here at DNA, has worked on some of the top campaigns, the top capital raises this year. Actually worked on case studies from some of her recent campaigns that have just closed out. Ashley, pleasure to be on the webinar here with you today.
Excited to be here. Definitely excited for this topic as well. It is a conversation I am having with tons of my current clients, so great topic to discuss towards the end of the year.
Boom. The energy is there. Hope you guys are feeling it. Ashley, what's your background? How did you get involved in marketing? Why do you choose to work on these investor acquisition campaigns and raise capital for issuers? Let's familiarize the audience a bit with Ashley.
Let's do that. I have been at DNA for almost 4 years, as crazy as that is to say, and have worked on hundreds of equity crowdfunding campaigns, and have had a fantastic time. It's honestly such a rewarding feeling being able to go through these different phases with different issuers and help them raise capital for their business, see the growth and everything that they have. I've worked with different campaigns too that have had multiple rounds and multiple raises, and it's great to just see the overall success and traction that it's had. I absolutely love it. Love being in this space.
And where are you calling in from today? I love the background.
I am in Capri. Just kidding. I'm in Los Angeles, but wish I was in Capri. I'm sure everyone does.
Fun fact about Ashley, she's a world traveler, and sometimes those backgrounds are real.
This is true.
So, how to raise capital during the holidays. Look at this beautiful deck. Brendan, our creative director, along with Jack Sweeney, put this together. Khalil Doheny, head of content marketing. Shout outs. This looks great. I'm in the mood. Here's our background. This is who's presenting to you today. If you're not familiar with DNA, we've worked on over 500 investor marketing campaigns that have collectively raised hundreds of millions in capital. This year alone, have worked on campaigns that have surpassed the $100 million mark combined. Some of the top Regulation A plus campaigns, Reg CFs that hit the full 5 million, have another right now over 4.6 and others in the seven-figure level. That's what's behind this. It's not just, hey, Jason and Ashley DNA felt like doing a webinar and talking about, cool ideas. No. This is what we physically work on, where we physically see, investments, results, tangible results at that. Why are we talking about this? Ashley, what do some of the conversations look like with issuers right now? Why are we talking about this?
I think a lot of people get concerned during this time of year, just given the high level of marketing that other businesses are doing right now, and that they're going to be overshadowed by that. So there's concern with just kind of lowering the level of ad spend is typically one of the top conversations that I have. Maybe we need to lower or shut off ad spend during this time because we're going to be outbid or outmarketed by other businesses that aren't necessarily even equity crowdfunding related, but just in general. And then again, too, just people kind of taking a step back from the marketing efforts overall, just with a lot of people being out of office and just different travel and everything like that. So there's not a huge push towards that, but that's actually the opposite thing of what you want to do during this time.
I've been in the discussion for years. I've had it with you know, major investors, different types of funds, people who, have worked in this space but offline for years. The founders got a picture here, profile persona, as we say in the marketing world. Skeptical founder, real fears. I want to emphasize real fears. This is not to water that down as much as to, really calculate, assess the risk, determine which route is better because it is a choice, it is a route, it is a path. No one invests during the holidays, right? I've already mentioned that note. It's something I'll hear several times today. I'll have an in-person meeting for lunch, hopefully in Manhattan Beach. Still determine the location. It'll be brought up to me. I'll be on other calls. I'm going to be on the phone with a portal today about some issuers. My ads will drown under sales season noise, right? The CPMs are high, the cost per thousand impressions, what we're bidding on. We're going to be alongside all of these different companies selling toys and gifts and everything the e-commerce world represents, apparel. How are we going to be bidding against these, $1 million budgets? Maybe I should just wait for January. You know, why don't I spend the budget then? What is the point? Notice the Santa hat on the DNA logo in the top right here. Money doesn't take holidays. Just gonna go into these stats. Ashley, you can advise on them afterwards. I know there's 2 pages in a row for me, but I'm a numbers guy. So this tells a story for me. Q4 2022, 110 million invested in online startup deals. December 2024, record 569 active campaigns were raising last year. This year could be at that number already at about 473, probably a bit lower, but at the same time that there's opportunity in that. November 2024 Reg CF 34.2 million was raised. It's called commitments, but were raised. December 2023 Reg CF 33 million in commitments. We'll have more stats throughout the duration of this, but December of 2020 at that time was the top month of equity crowdfunding to date. All of this is to state people are raising, people are investing over the next 45, 60 days. Will they be investing in you? Will they be investing in a competitor? Or their portfolio be tapped during that period of time? It's going to be happening with or without you. So why not get in front of those audiences that are, at home, maybe traveling on their devices, less work, less calls. They're shopping around. They see these investment opportunities. They're already converting on 5, 10 other things that day. Why not make a retail investment perhaps larger for themselves? It doesn't take a break. It's going to be moving. And what happens if you hit pause now, Ashley?
I mean, if you hit pause right now, you're losing out on that sense of traction that you've been working so hard to build. I think one of the key things to take note of as well is that a lot of people have this same mindset and mentality that they need to slow down on their campaign during this time. So you're actually getting ahead from everybody else by not slowing down and pushing a little bit harder. You're going to have a better sense of visibility on some of, let's say, the campaign page updates that you push out or even emails that you push out and ads as well. So there is definitely a misconception about hitting pause and that kind of being a benefit. It also loses out on your audience and your retargeting pool when you start to ramp things back up in January.
Exactly. Pausing the algorithm and risking losing performance. Meta, Google, these ad platforms, they're all built on algorithms. Meta, the foundation of the edge algorithm is really what, put the mobile product on the map. It's designed to get the right ads in front of the right users at the right time. So if you're bidding on an ad placement and another issuer is bidding on an ad placement, perhaps an e-commerce company in there as well, the algorithm, the system is going to take into account how audiences have performed around the KPI, the key performance indicator you've indicated from that creative. It's then going to look at that audience member and see what they've clicked on, what they've converted on recently, and find the right ad for the right user at the right time. I'm a big advertising fan. Sucker for a good advertisement at that. My wife's cut me off on subscription services, says no more for the house. I see a good ad, I'm probably going to convert on it. Maybe I just have, an extra listening for it. But at the same time, I believe ads, it's what makes these platforms free of cost. You look at television and the commercials, it funds more than we realize. And I think it's just a matter of getting advertising to audiences that they want to see. There are platforms that have experimented with reward campaigns and other types of initiatives. So they're showing ads to audiences that they've indicated they want to see. Not every platform's built like that. So these algorithms are designed to do it. And if you shut it off, you're kind of starting again from zero. Competitor campaigns stay visible and grab your investors. So is this going to be the top campaign on Start Engine getting the investors, the top campaign on WeFunder, a top campaign using Dealmaker technology, or is it going to be yours? And those retargeting audiences, don't let them forget about you. You can run retargeting for $50 a day. If your traffic's low, it may be $5 a day. You're limited on bids to that audience. And you want to stay fresh in front of those individuals. You don't want to disappear, come back 2 months later, a month later. Hey, we're still here. We're looking for investments. Maybe we have an announcement, but you haven't heard from us in a couple months. You want to be front and center. You want to be on their radar. You want to be showing them all the great things you're doing during this time of year. You don't want them to think you're taking it off. That's what it could feel like, that you've just gone away, disappeared. So restarting in January definitely feels like starting again from zero. These campaigns thrive off momentum. We talk about benchmarks of, hey, once you're over 100K, once you're over 250, 500, a million, 2 million, 4 million, your conversion rate is going to be higher and higher and higher. But we put an asterisk there and say it's also contingent upon continual movement. So if I get to a campaign, there's $1.8 million raised. I have a campaign I'm thinking about when I say this, by the way. And I get back in 3 weeks, there's still $1.8 million raised. Maybe not a dollar, maybe not a new investor, whether there's a few or not. That says something. Or if I get to a campaign and there's 300 raised today, and next week there's four, and next week there's five, and the week afterwards there's six, that one's far more appealing to me. So do not lose that momentum. What else are we seeing here in Q4?
Just to add on to what you said too about losing momentum, it's also losing a level of excitement, right? So how you said if you come back to a campaign and it's still at 1.8, if people have
Mm-hmm.
been following along, your campaign throughout its entirety, and then they're seeing that level of momentum, that builds a level of excitement. They really want to invest too. When they're starting to see a ton of traction, more investors coming in, more money coming in, it just showcases a level of excitement for them. So again, another reason just not to hit pause during this time.
Absolutely. Absolutely. We give that example of the empty restaurant and the line around the block. If I see a line around the block at a restaurant and I want to eat there, and then I wait a few weeks, and then when I actually go, it's half full or I don't have to wait, I start to ask, hey, has the allure weared off? Do people actually not love this place anymore? It says something subconsciously.
Yeah, it definitely does. And then in terms of finishing out and what you kind of can anticipate in Q4, I know for myself personally, I obviously am trying to disconnect from my phone to a certain extent and spend time with my family and have good memories, right? But I do find myself constantly on my phone. It's inevitable because there is so much downtime. And I'm typically shopping, or because I've obviously been in this space for the last 4 years, I'm researching different crowdfunding campaigns, what's going on within the industry. And you're going to find that a lot of people are doing that as well. And again, it's going to play a factor into new people that are finding your campaign, as well as people that have been following along throughout the entirety. Because they have this downtime, they're going to want to do a little bit more due diligence and research. And then this is the time for them to do it.
Exactly. It's funny. I do the same thing. I'm like, okay, gonna be at my folks' house for the weekend. My wife, my baby, we're there. I'm not gonna use my phone. And then, baby's asleep, wife's asleep early on the couch. I see my brother on his phone. I'll take a look. 20 minutes goes by. Think of how many ads you see during that window. It's inevitable. We're living online these days. So you absolutely want to finish strong. You're reaching people who are thinking about their finances in many cases as well too. You can see here year-end tax planning. And, we're not tax accountants, we're not professionals in that space. You could talk to yours, both on the business side and personal side, and you may hear recommendations to spend more and in different investment vehicles. And, that there's investors that pull from their IRA for these types of deals. But what happens in that invisible line before December 31st actually matters and is in the background for some of the prospects you're going after. As you're saying, Ashley, extra downtime to research, especially the long-term bets on the phones. If I'm at a conference, if I have a busy week, full, day of calls, 3, 4 days in a row, I'm limited for how much time I'm spending on my social media platforms or websites that I go to read up about what's going on. I'm really not able to invest the appropriate amount of time towards my portfolio. But during that extra window, I find myself there more and more and more. Treat yourself. Purchases can include startup investments. I know that's a big saying on these platforms these days. Treat yourself. And it's true. And we're going to show you some of the campaigns that is occurring on. Also, this is one of the most important slides for me because it brings in the actual results. What do we see in terms of campaigns that hit their full goal, Ashley? How long they're live, and what does it mean if you're not utilizing this time increment?
I mean, what we see, I feel like in terms of campaigns hitting their full goal, obviously there's that level of success and excitement when you hit that full goal. But then there's the aftermath too of what exactly are you going to do with the campaign after that. A lot of issuers will typically go live on another campaign after. So being able to hit their full goal during this time is such a huge win. And I mean, what a better win than during the holidays to hit your goal.
Good time to celebrate. Time in the market, not timing the market. Classic investor adage. Very true for investor marketing as well. So the platforms, marketing agencies, they'll probably tell you, 3 months is a good window of time for a Reg CF. Maybe you continue from there based on the traction, the performance that you're seeing. That being said, most campaigns are live for longer that are actually moving. Uh, from my perspective, only 7% of Reg CF campaigns, both in 2024 and 2023, hit $1 million or more. You could find this on kingscrowd.com. Type in 2024 insights, 2023 insights. They'll break it all down for you. You may be very surprised by the median. Half of the campaigns in 2024 did not raise more than $114 million. I believe it'll be a bit higher this year, perhaps 129 million as the, excuse me, 129,000 as the median. So half the campaign's under 129,000. The 7% gonna have to wait. Look at the insights with you guys. Our January webinar will likely be around that. I may add 5 million. There was only 5 campaigns that raised 4.8, let alone 5 million last year. It'll be a little bit higher this year, but a little bit. So most campaigns aren't hitting their goal and probably need to be live for longer. Half of the Regulation A plus campaigns last year cleared $2 million. Stop and think about that for a second. You spend relatively extreme amounts of funds to just file your Regulation A plus campaign. You're probably experiencing somewhere between a 3 and an 18-month window just to complete the filing, and you do so likely because you want to raise more than $5 million, more than what Reg CF allows. Much lower cost to take one of those live, I may add, let alone the timeline. Meanwhile, you're not raising more than 2 million. It's wild. It's not acceptable. It's insane. So a Regulation A plus campaign's not going to market through the holidays. You can get past that $2 million mark, friend. The average, I may add, unless they changed the number, there was a few corrections in the 2024 insights early in the year, but I believe the average was 6.5 million. But that takes into account the $75 million deals, and then averaging with the half of them that didn't surpass 2 million. So winners, the top performers, use the most of their 12 months. Losers forfeit holiday weeks. They look for excuses. They're the ones saying, I don't think my platform is working, and that's why we're not getting investments. I don't think this group we're involved with is doing their best work. That's why we're not getting investments. And we're not getting the return on ad spend during this week. Sometimes past 2 days, small windows. So we're not going to market through these periods. They say the same thing in the summer. Hey, aren't investors on break right now? Hey, it's 4th of July. Who's on their phone? Who's investing? The top campaigns get investments on the 4th of July. The top campaigns get investments during these weeks. So definitely encourage the usage. What are we seeing on this page?
We see the winning and the losing. So again, reiterating a ton, winning campaigns stay live, they stay active, they don't disappear. This is the time to push your marketing efforts very heavily. And losing campaigns, people start to check out. They have that mentality of, I'm out of office, everyone's out of office. I'm not on my phone as much, everyone's not on their phone as much. Those are losing campaigns. You don't want to have that mentality.
I used to see this in advertising sales, and the reps that were low performers would state one thing, and the reps that really had the right relationships, they did the right follow-ups, they were able to capture people's attention and excitement. They were still getting deals. They're getting hold of high level CEOs during this window of time. I had a boss that said, CEOs are at the office and no one else is right now. This is the time to do it. Winning campaigns versus losing campaigns. Playing off this a bit further, winning campaigns share weekly headline worthy milestones, not filler posts. Don't post just to post. Showcase third party validation, social proof. We're doing a podcast run right now. I'm a guest on over 10 podcasts a month. We've just rolled out a podcast product to be featured as a guest on podcasts, four more a month. So basically a weekly podcast you're able to point to. Why not do a bunch of content during this window of time? Why not seed some publisher relationships, if not get featured by some different financial email newsletters, entrepreneur, investor, your vertical specific sites? Losing campaigns, cut ad spend to save budget while momentum dies. How much are you really saving? Is that a win for you? Does that make a difference for you? Or does it not matter and really getting investments, having that capital come in through this period of time, having a spike thereafter, would that be more meaningful when you look at the bigger picture? Number three.
You want me to take this away?
Crush it.
Winning campaigns, they talk like the deals are happening because they are, and that's just an absolute fact. You don't want to continuously post the same content. And again, it kind of feeds into the last slide for point number two of just the generic posting just to post. You're going to lose a level of interest from people when you're just posting to post. It can be seen in the content overall. So talk about the excitement, talk about the things that are happening, talk about upcoming milestones that you're trying to see, talk about the number of investors that you have in the campaign so far. A lot of the ones that I like to do for my personal clients is help us get to X amount raised, help us get to 500,000, help us get to that million. People will kind of see that and then they'll go and have that interest and spark of, oh, okay, well, where are they at currently in the campaign? It kind of encourages them to click. And then when they go, they see, oh, I only have to invest X amount of dollars to kind of help them get to that milestone. And that also builds a level of excitement too.
Ashley, you are a social media aficionado, an expert. Uh,
Thank you.
I'm saying this, there's no lower word I could use to describe it accurately. What's an example of a boring, filler post? And is there an exciting post you've seen recently? Doesn't have to be investment oriented, but just something that comes to mind. So we're painting a bit of a picture for the audience.
Yeah, I think a lot of like the boring filler posts that I see are I think this one more is crowdfunding related, but just like a generic Merry Christmas or Happy Holidays or just those kind of like filler posts that don't really do anything for the viewer whatsoever. I think some of the exciting posts, a lot of what I like to see that catches my eye is video content just in general. So I think obviously we're in that Black Friday time right now. I'm seeing tons of Black Friday ads from tons of different businesses. What I notice that catches my eye personally more than others is when I'm seeing some sense of video footage that really showcases the product or what the sale is or whatever that is in a good form comparative to just like a plain static graphic. So I think a lot of issuers definitely shy away from doing video content just in general. We always try to encourage people to do selfie style videos or just, more video footage overall. I think that really captures people's attention. And this is definitely a time where you can kind of start to bank some of that content.
Absolutely. I'm thinking of a few videos as you're saying that as well too. You can really capture the energy, the momentum. I had to do one for a conference during this time of year, and I happened to be at the Grove Outdoor Shopping Center here uh, in Los Angeles. Is that considered Beverly Hills, Mid Wilshire, uh, Beverly? And the big Christmas tree is in the background. And there's, a lot of people running back and forth, and some of them are dressed in a festive way. You can really do things that are communicating non-verbally as well here too. Why waiting to communicate is risky? Investors forget you faster than you think. I heard a stat of we see 60,000 advertisements a day. So, everything around you is an advertisement. I got my Roth Capital Partners pen here, my Misfit protein bar. These guys don't pay us. This is just something that's sitting right here. My Apple phone, the list goes on. These are all actually advertisements, brand logo, let alone everything we see on social media, in our email, while driving, on TV, listening to podcasts. Podcasts I was listening to this morning, I had 15 different brands. I was surprised because it's a snowboard podcast. Like, wow, they're getting a lot of sponsors here. It's so easy to forget about each of those 15 right now, or anything on my desk, or who I saw on Instagram at 7 o'clock this morning. So although you think uh, you have a beautiful baby, there's a lot of babies, and really people forget what you're doing unless you're continually staying present. It's harder to receive a cold lead after weeks of silence. Excuse me, revive a cold lead after weeks of silence. It is. You know, what's a good example? Think of a direct salesperson. Maybe you're looking for a car. You stop looking for a car for a bit, maybe purchase a car from a different dealer, a sales rep from a different dealership calls you, and you're like, what are you doing right now? Like, I didn't call you. Like, I obviously don't want to talk to you. It's tough to revive it. Where that week, I would think, hey, they're just being persistent. They're being friendly. They figure out a creative way to get in touch with me and a good opener. The timing is crucial. Every quiet week is an investment stolen by louder campaigns. Absolutely. There are campaigns with share price increases that'll occur. Some were on November 20th. Others are going to have other dates coming up. They're going to be marketing heavily. There's going to be issuers with new, very visible lead investors. You know, someone that everyone knows, and they'll show up on the advertisements. There'll be new publisher placements. They're going to get more of the attention. Oh, I love what they did with the chimney. We were talking about this yesterday.
I do
Ashley,
love.
what's the funnel, and what does that funnel look like during the holiday season?
So top funnel is, new prospects, people that you're trying to get into the funnel, trying to familiarize them with your campaign, and the investment opportunity overall. Middle funnel is extremely important. I always speak to the middle funnel. Obviously, every stage of the funnel is extremely important, but middle funnel is where that retargeting audience, people that visit your campaign, and what we're kind of talking about if you shut things off, you lose out on that sense of traction of people having visibility. I know for myself, when it comes to ads, obviously there's so many ads I see on a day-to-day basis, especially e-com. And if I see an ad for something that I've obviously researched or I've just seen it, 5, 6 times, by the sixth time, I start to get a little bit more intrigued. And then suddenly I'm like, oh, you know what? Let's just buy it. Let's just check out. You want to make sure you're getting people in that middle funnel and not letting down on the gas on that one because you need to continuously push on that. We always say here too, for ads, it takes 7 to 17 touch points for a campaign to be able to have an investor come in and finish to the bottom of the funnel, which is where we have the founding and closing communication. So, bottom of the funnel is also extremely important. I think a key thing to discuss in terms of bottom of the funnel as well and some closing communications as we close out the year in Q4 is how the year went overall for the business. And then also talk to some of the traction that you guys have had in the campaign. What is some of the success that you've seen overall? This is a really good opportunity to not have that filler content and wrap everything up into just a year-end summary for potential investors and then current investors as well.
Well said. I can't get over the image of this chimney. It was yay big, and they designed it. They built the bricks, they laid the mortar, the funnel. Taking audiences historically from awareness, consideration, intent, conversion, repeat conversion, advocacy. So, talking about some of the content pieces really bring it to life here, and it is amazing how quickly we go from I'm not sure, this is interesting, to okay, I can't keep seeing this and thinking about it. Time is money. It's valuable. I just need to move forward on this. Let me get in there and complete my action. Creative checklist. For busy holiday feeds, use short, clear videos and graphics, not long text. Excuse me, long text. Again, our time is important. We're busy. We're trying to shop for large lists of family members, perhaps coworkers, friends. The list goes on, partners, children, what have you. I'm not going to read a block of text. And even look at how we designed this page. It's a block of text, but there's visual hierarchy. Your eyes know where to go with the creative checklist, and then with the smaller font size for busy holiday feeds. With the bolding, I could glance, not long text, subtle seasonal cues, 3 seconds or less, unmistakable call to action. They've treated me intelligently. Where if it's just all on there, like it's, a 10th grade PowerPoint that's being put out, and that's your ad, that's your pitch deck, you're not going to get the engagement. It's likely not going to mirror the valuation you have on your offering page. So use short, clear videos and graphics, not long text. Look at the top brands, see how they advertise. They have a lot to say. Are they doing it over long text? No. Punchy, taking you to the next stage of that chimney, next stage of that funnel. You're Santa in that scenario. Subtle seasonal cues keep everything on brand, but not gimmicky. I think this is a pretty good balance of on brand, not gimmicky. Maybe over the top a little bit, but no, I think it's appropriately seasonal. Uh, it's not tone deaf. I could have just put the funnel here. Actually bought a funnel. I'm going to write on it and have numbers and show, how traffic progresses. But this is timely. This shows this is our November webinar. We're about to get into Black Friday. We're about to get into holiday shopping. Subtle seasonal cues. Make the benefits obvious in 3 seconds or less. So, creative checklist, the benefits are obvious to me. 3 seconds or less. If it's that full body of text, now I have to read creative checklist for busy holiday feeds. I don't know, but that felt like 4 seconds to me. It already felt boring. It already felt like, hey, this is too much. Maybe I should come back to it. Do we come back to things after we say that? Statistically, no. Small percentage of us will. So make the benefits obvious in 3 seconds or less. Your offering page is going to do the selling for you. The organic social media posts, the paid advertising placements, the outreach messaging, it's just designed to get a click, to prime the audience. You can't be inconsistent with what they're expecting on the other side, but to prime the audience, but to get them over. You do not have to give them your life story. You just have to grab their attention in 3 seconds or less, not long text, subtle seasonal cues, and always include an unmistakable call to action. Does it always need to be invest? No. In fact, I looked at a portal updates for an issuer that's performing marginally. Not one we're working with. I was kind of auditing, giving them tips, giving them ideas right before this, and every portal update, I won't name the portal, says invest at the bottom. Invest, invest, invest. It's like it's too much. You can have calls to action that are outside of that, but make sure you're directing the audience there. If we ended the webinar right here, you would say, okay, it's a bunch of information, and then it's up to you to figure out what to do. Do I want to get in contact with DNA, ask them a few questions, maybe have them audit my page? Where if we say something at the end of get in touch, we'll audit your page, it makes it very clear. The investor scrolling through their device, they don't know what to do with the information. Learn more. I Sure, if you have an invest button, even better. Sign up. Let's say it's for a webinar. That's why we'll add buttons to the images quite a bit, so we could articulate it further. But I heard a stat about real estate agents saying the unsuccessful ones don't ask for the business. Ask for the business. Ask for the investment. Do you want to do it every time? No, it's overwhelming. Sign up. Learn more. There's other things, but make sure you're directing them to the next stage of the funnel. Founder-led content. Look at that founder to the right there. Ashley, what are some tips we have for founder-led content?
So again, I talked about this briefly earlier, but selfie videos make people feel personal to you towards what your opportunity is, towards the campaign overall. You want to have that personal touch. It instantly stops people in their tracks when they see an ad that feels like it's not really an ad at all. And so selfie style videos, especially the ones that are not so polished and cut perfectly and everything, actually perform some of the best and get a lot of conversions that come in from that. Because again, it's stopping people in their tracks. So you want to be able to do that. You want to talk on key points about why are you raising right now? Why is now a good opportunity to get in on the investment opportunity? What exactly is it that you can put together on an emotional level too, depending on your campaign, of course, but that can make an investor want to come in on the campaign on an emotional level too? Um, yeah, I think all of these are great things to point to.
Absolutely. You got ahead of us when you said it. You already knew this is what will resonate. And a lot of great tips, a lot of great ideas here. Mission, traction, why, understanding the why is a big deal. Short clips, weekly, make it active. Don't be afraid that, you're blowing up your audience. Again, that sounds like a sales rep who's underperforming. You want to find creative ways to follow up. And that's what you're doing here. Marketing is sales on a mass level. So instead of following up, with one investor at a time, you're following up with thousands at a time here, potentially more. Some of our clients, it's more. So use timely creative backgrounds. Don't disappear during the holidays and expect them to buy from you in January, buy your shares, your offering, your debt, January. It always amazes me when I speak to an investor. I was at the CFPA summit in DC last month, and there was a few people there. One in particular who invested in a deal every day last year. I was amazed by that volume. And when I talk to investors, they'll reference the founder by first name. Jeremy, Dan, Seymour, Brad, Galliano. Yeah, you can probably guess some of these companies if you follow the space. They feel like they're friends with them, that they know them, that they, invested with them directly, that they're shareholders, partners alongside them, and they should. So be a good friend, be a good partner, be a good founder that they've put their hard-earned funds into, that they have an interest with. So that content goes so long for those reasons. Great slide here. Offline holiday conversations, online results. Family and friends trust each other more than ad copy. Don't have a source to back that, but believe it to be true. Give supporters a simple why. I'm sure I could find the stats, by the way. Give supporters a simple why I invested sentence to share. Expect raise mentions at dinners, parties, or group chats. And you really want to arm your audience with stats, with data. I mean, they're going to be talking about what you mentioned last. The Thanksgiving table conversation always takes me back to Thanksgiving 2017. Couldn't tell you too much about the Thanksgiving dinner itself. I'd have to look at pictures and then I could. But I could emphasize to you the price of Bitcoin. BTC went for a run. We got involved with Web3 and worked on, campaigns there starting August 2017. Bitcoin was at about $2,700 at the time. During Thanksgiving, we saw it cross 10, got higher, 12, 14. It's being talked about a lot. And there's liquidity. So you'd see people who may not have been the most financially responsible, driving Lamborghinis and making outlandish purchases and really cashing out on some of their long-held BTC. Hopefully, they held more of it. Even in a down market, talking about numbers in the 80s and 90,000s, other points in the year, 110, 120. It's been exciting to watch. But there was a spike right after Thanksgiving because of the Thanksgiving table conversation. The conversation will look different this year around Bitcoin, unless there's some drastic movement over the next couple of days. If so, it'll be negative. But maybe they're talking about you. What are you going to give them? Short text, punchy, everything we talked about here, subtle seasonal cues, 3 seconds or less. 3 seconds or less starts to seem more important now, right? Because how are you going to get someone else to repeat what you're saying if it's long? What are they going to be saying about you Thanksgiving on Thursday? Ashley, you want to talk about Atom Beam here?
Of course, this is one of my favorite campaigns I've literally ever worked on. And it speaks a lot to what we've been talking about. Charles is one of those founders that people refer to him as his first name. They feel like they're friendly and familiar with him. He's fantastic at doing those selfie style videos that we discussed as well. Very casual, just kind of in the moment. We would send him, an idea or a script or something like that, just a general basis to get his brain going. And he would be at these conferences and he would do these selfie style videos at the conferences and just make people feel so connected. Like you really felt like you were following along with him through tons and tons of different opportunities and things that they were going through and multiple raises that they did. I worked on think two of their Reg CF campaigns, if I'm not mistaken, and their Reg A campaign as well. I think one of the biggest successes that they did during their campaign too, in addition to obviously not stopping the marketing during the holiday season, but they just never stopped in general. They continued to market between raises and campaigns too, discussing, success that was going on during that period, speaking to potential opportunities that were to come, getting people excited about, potential raises that can come again in the future. And what that does is, again, just rebuilds your audience pool, your retargeting pool of people when you don't slow down because they're just constantly seeing you everywhere.
And this campaign was a November, December campaign.
It was.
This was our third Reg CF with them. So 2 years ago, December, November of 2023, over 3 million raised, over 3 million raised in longer periods of time for their second and their first Reg CFs. This one was very quick. If they decided, hey, let's push this off to 2024, it would have completely affected everything they did on their Regulation A Plus campaign the next year. Uh, the success of this really fueled everything for the early stages of the Regulation A Plus campaign. They went into test the waters in February of 2024, ran advertising to the extent of over 7 million in reservations, over 4 million raised in the first week, end of July 2024. We ran the advertising through about October. Start Engine picked up on some of the advertising from there, and we did all the content through the closing of January this year and messaging thereafter in February. And it raised better part of $20 million, about 19.9 and some change. It was the success of these Reg CFs, the success of the, test the waters that got at least the initial tranches. By the way, last year, November, December, that's really when the campaign went from, 10 to 20 million. So again, did Charles determine to hold off? No, no. Charles kept putting together new partnerships. Look at this. Adam being partners with Intel. Adam being awarded second contract with USAF. Selfie video on both of these. Like Ashley emphasized, you could see where all of this comes from. And again, could have affected the reggae. The whole trajectory, the time continuum would have been different if this didn't take place in November and December. Epi 1 campaign wrapped last December, 2 million, 94,000, 12.58x return on ad spend on the pixel. Every $105 spent, new investor, marketing efficiency ratio, how much was spent, how much was raised, over 39x as a whole. The pixel only tracks so much. Outside of the conversion windows, outside of mobile iOS users, and I mean, that's limitations significantly there. Final month to invest. You could see some of the images. You could see some of the videos. Excellent episode of the podcast as well too, if you want to check it out. But again, December driver. So got a few pages here on highlights. I want to tackle this first one of December 2024. Highlights, WeFunder, 8.7 million raised, Start Engine, 7.8 million raised, Dealmaker, 1.9 million raised on CF campaigns. This is outside of the Regulation A Plus campaigns. Republic, 1.889. You can see three of the top campaigns there. Weatherflow Tempest raised 1 million last December. One 031476. GeoShip, of their 2 million, raised 979 that month alone. Good thing they decided to advertise throughout that period. Great team over there. Firepoint Energy, 936 in the month of December alone. I always like looking at this on Kingscrowd. You can see what they do. If you go into the advanced search, you could see their valuation, their revenue, their multiplier, everything about their offering type. A lot of information there, even on pages that you think, oh, the valuation's not listed. You can get to Kingscrowd, they'll see it. Um, what about December 2022, Ashley? What did we see there?
December 2022, we did see commitments, I'm sorry, not commissions, of 20 million. Start Engine was actually at the top up there for the month. And then we also saw Eastern Market Brewing, which actually I do love. I love like a brewing company. I'm and everybody in DNA knows when it comes to like any type of campaigns revolved around alcohol or anything like that, I get super excited. But of course, another one was the pharmaceuticals one as well, which is the top player.
There you go. So 1.07 with that Eastern Market Brewing in December alone before hitting that cap of 1.235. December 2020, this is what I was referring to. This at the time was the top month to date. Uh, had campaigns running there, had some that did extraordinarily well. At Reg CF, you can only raise up to 1.07 million until March of 2021. There was a rush of campaigns that relaunched at that period to go up towards 5 million. A lot of $5 million campaigns in the next 6 months, companies that were able to lean into that. So 28 million, 28.4. Volcon did the full 107 that month. First all electric outdoors vehicle manufacturer. 1.065, probably full 1.07, and saw some investments not go through for solar roadways. So, again, the whole thing took place in December when investors don't invest. They were able to do this. So, what's the big picture here, Ashley? I've done a lot of talking from your eyes. What's the big picture?
So I would say big picture is to market. Use this time as an opportunity to push out as much information about the investment opportunity as possible. It says here too, use January or use now through early January as one continuous sprint. But what I will add to that is do not rush through this either. Don't again push out these what feels like fluff content, not super relevant, things that people are going to start skipping by. Give people information and excitement about the opportunity ahead and really push through so you can have a strong January. People are a lot more focused. You have those New Year's resolutions, of course, obviously, when people come into January, everyone's kind of done with the holiday season and the travel and all of that. And there's really a level of focus. And you want to be at the forefront of people's minds when they come back in January. Whether they invest now through the holidays or they wait and invest in January, you're still wanting to be top of mind for them.
Absolutely. Great thing to point out there. It may not show up in December as much as January. Probably wouldn't have shown up in January if you didn't mark it all the way through. Ramp up, holiday push, January follow through, looking for that end of year surge, holiday content surge, using the word surge here because it's such a powerful word. Increase posts, emails, and investor touch points during holiday weeks if you're able to have enough value, enough excitement, enough headline worthiness for those posts. Share weekly headline updates investors repeat at gatherings. Tilt budget toward retargeting while still bringing eyeballs, new eyeballs. Advertising, we could increase retargeting and likely see a stronger level of performance for a period of time, perhaps even a small period of time. If you have at least a portion of your budget towards prospecting and bringing in new, I want to say fresh meat. If you want to bring in, new prospects, new eyeballs on a daily basis, that retargeting pool continues to grow. Also, people who've been there more recently tend to convert higher, that fresher retargeting. Post a founder video explaining mission, traction, why now. Again, talked about the ability of that. And you want it to feel like other posts, other content the investors are seeing on their social media platforms. So it's going to seem like it's coming from a contact, a follower, a friend on social media if you have that going through. What does that January follow through look like, Ashley?
So continuing that communication, making sure that again, you're not slowing down when January comes. You're kind of giving some new updates and what's to come for the 2026 year, some progress, some excitement, some opportunities to look forward to. Again, I typically like to lean into the content of how the 2025 year came and concluded towards year's end. I think that's an important thing for people that are already invested in the campaign, and of course, people that are looking deeply into the campaign to become an investor. And then, of course, when January rolls around, everyone's excited about upcoming opportunities. Okay, here's what you've accomplished in 2024, or I'm sorry, 2025. What can we expect for 2026? So, continuing to make sure that you're following through. I think one of the key things as well is investors love over communication as long as, again, it's not irrelevant communication, that you're making sure that everything that's coming out is important. It's something that makes sense. It's valuable information that they're receiving, but they love to feel like they're really being checked in by the founder. One key thing that I noticed, Charles from Adam Beam, and I'm sure many other people do very well, is answering people's questions that they have on the campaign page as well. And that just makes them feel connected. So making sure that you're kind of checking in with people there, posting the updates. If you see people are asking questions after, quickly responding to those, making sure your cadence is just high throughout January and you're not kind of like falling down.
If more issuers did that, we would see higher numbers as a whole in the space because they'd be continuing it throughout the year. And an interesting note about December that the median could often be lower because so many issuers really hold off. So the top 10, the top 10%, they're getting all the investments, bottom 50% a bit lower that month. But yes, these are the best practices to follow and will likely show a higher level of engagement as well as investment. I get asked about, how often should I do this with prospective clients, with clients. Here's a weekly rhythm you can actually sustain. Not overwhelming. I'd say minimum one portal update, one email, and three social posts weekly minimum. This is manageable. This can be done in a relatively small window of time, even if you're doing it yourself, let alone if you have a team. Add one short founder investor video to that weekly cadence. Ashley made it sound too easy to me. I mean, you can really just put a half hour block into your calendar, use 5 to 15 minutes of it, even with multiple takes, get it to your team, have them, throw some visual overlays, and then post from there within that window. It even says, spend 10, 30 minutes doing competitor and portal research. So this is a bit different. I do it every Monday morning. We have a 9:15 team meeting. I get the stage at 10. I put together a little presentation on the weekly Saturday report on King's Crowd. So Saturday to Saturday, I want to look at the top portals. I want to look at the top 10 issuers. They now show the top 30. We then do a marketing audit of one of them. And so, over the course of the year, we're auditing 50 that we're not even involved with. They're different each time. So, let's say a top 50 list. Success leaves clues. You could look at SimilarWeb and see how much traffic they're getting and from which traffic sources and demographics. You could look at SpyFu, see about where they're ranking on search engines and other articles that are driving traffic to their site. You can look at their search ads if they're running them. You can go on Facebook Ads Library, Google Facebook Ads Library. You can see any of the ads that any live advertiser is currently running on Facebook. You can look at their social feeds, days and times of week of the posts that are getting the most engagement, as well as the types of content. You want to get inspiration from this. You could look at their email newsletters. There's platforms you could look at like Milled to see which email newsletters that are talking about them. Google News, 10 to 30 minutes, even in 10 minutes, you can do that and really have some strong takeaways that you are then able to consider incorporating into your campaign with your own brand touch, of course, and match activity level to your monthly capital target. Don't have your hands cuffed to the time of year. Look at what you need to do. during this period of time so you can have a successful campaign in 3 months or 6 months or whatever it looks like. Uh, Match the activity level to what you're actually trying to do right now. Any insights on budgeting? Any recommendations on budgeting, Ashley?
Yeah, I think a lot of people have hesitation when they see some sense of success and they kind of have this waiting period of like, oh, okay, well, this week I had a lot of success, but maybe I need to hold off and see how next week goes. When you see that success, definitely scale. Put your money towards that. You're going to increase your conversions, you're going to increase your visibility, the impressions, all of that type of stuff. You want to make sure you're scaling at the appropriate time.
Exactly. So saving 5 to 30K now can cost, if you're saving it now, it could cost you hundreds of thousands, even millions in capital. I've seen campaigns go flat in January that were moving in November. Sure, they were able to save their ad budget, but it just it hurt them in the long run. Also, if you're spending lower amounts but seeing a good return on ad spend, it's like betting $5 at a blackjack table versus $50. You know, walking away with $70 versus 700. Maybe that's in, 15-minute window of time. And if you're used to those $50 bets and bring it down, those wins are actually going to feel like losses. You're getting a 5x, 10x on $100 a day and walking away with 500, $1,000 a day versus the $1,000 a day, $2,000 a day you were spending. It's kind of a loss. So you could watch it daily, could look to increase it from there, but again, be committed to your goals, not the savings, and look at what you can do to improve the results. Ongoing conversion rate optimization, ongoing ad optimization. Be comfortable yet bold enough to hit your raise goal. It's got to be meaningful enough towards your total amounts. So, uh, getting into the key takeaways here, but the mindset, who you're listening to, choose to copy the people closing, not the underperformers. Decide which group you're in this holiday season. People who say nothing moves in Q4, it's the holidays. They're typically underperformers or associated, advising on underperformers. Top performers, you'll hear more along the lines of here's the deal I just closed. Let me tell you about this investor just came in for 70K. I got off the phone with him. You want to listen to more of the performers during this period of year. Ashley, you want to fire through these takeaways with me real quick?
Yeah,
Kick it
of course.
off.
Absolutely. Data proves holiday capital is real and not wishful thinking. Definitely look at the data. Data is key and data doesn't lie. So pay attention to that one.
Unfortunately, it doesn't lie. Key takeaway for skeptical founders number two: real campaigns win by staying live and consistently visible. Time in the market.
Simple study calendar historically beats wait for January. Definitely during this time, build out your calendar. You have the time still to build out that calendar. Schedule out posts, schedule out emails. Take it off of your plate so you don't feel like you're rushed during the holiday season, but definitely get it done.
Your raise only stops moving when you do. You get to set this narrative and what you're doing and how you're getting it out to the audience. We did it. Questions, would recommend directing through our site as we're at the last minute here, or LinkedIn. Follow Ashley, connect with her. If we're not connected, don't be bashful. Reach out to me as well. Ashley, amazing job. Any final words of wisdom you want to leave everyone with today?
I think final words is just don't slow down. Continue on the marketing efforts on your campaign. See that success, get excited about that success, and at the same time, have a wonderful holiday.
And then we too, like as an audience, can be in Capri, like
That's
Ashley
right.
is.
Exactly.
If you follow these insights, follow these recommendations, don't go at it alone. Engage experts. We always welcome a warm marketing conversation. Does not need to be transactional as much as we want to see a higher success rate industry wide. Get in touch with us. We'll give you ideas. We'll let you know what we think of your ads, your offering page. There's always something to improve. So get that outside perspective. And if we don't speak with you, happy Thanksgiving. And we'll see you all in December. Thank you, everyone.